Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we are looking at Cadrenal Therapeutics, ticker CVKD.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out Maxlin Loans through my link below. Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved. But please be careful, always read the full loan agreement, APR, fees, repayment schedule, and total cost before signing anything.
All right, so imagine trying to run a marathon, right? But you have this massive parachute strapped to your back.
Oh, that sounds miserable.
Yeah, exactly. I mean, no matter how good your shoes are or, how flawless your training is, you are just dragging this invisible weight behind you. And in the biotech investing world, that parachute has a very specific name. It is called regulatory overhang.
Right, the ultimate high wire act for these microcap biotechs.
Exactly. And understanding how and when that parachute gets cut is often the difference between, catching a massive upward trajectory or just getting totally stuck in a value trap.
Which brings us to Cadrenal Therapeutics. They are trying to transition this massive medical asset from phase 2 to phase 3 trials, but they are doing it while walking a completely terrifying financial tightrope.
It really is. You have these brilliant scientific teams, right?
Yeah.
And they are trying to cure conditions that have baffled the medical community for decades, but they are doing it while basically constantly monitoring a burning pile of cash.
Yeah, a very fast-burning pile of cash.
Right. And that regulatory overhang you mentioned, that is the single heaviest weight they carry because the underlying science of a drug might be incredibly sound. But until the FDA actually clears the path forward, the broader market is just not going to assign any real value to the company. The stock price just stays pinned down. So getting the FDA to finally agree on a path forward that cuts the parachute, suddenly the company can run. But here is the catch for Cadrenal, and really the crux of what we are unpacking today. Even without the parachute, you still have to actually run the race.
You still have to pay for the marathon.
Exactly. You have to execute a global trial, and that costs tens of millions of dollars. So if you are looking at this stock as an investor, you are staring at this wildly asymmetric setup, a potential medical breakthrough just colliding with some brutal balance sheet realities.
All right, let's move into the wealth building context. Because to really grasp why this setup is so volatile, we first need to understand the asset itself. If the science wasn't, fundamentally disruptive, none of this financial maneuvering would even matter.
Right.
So Cadrenal's flagship asset is a compound called CAD-1005. And right now, CAD-1005 is the only selective 12-LOX inhibitor in clinical development anywhere in the world.
Okay, I want to pause right there because 12-LOX inhibitor is, that's a heavy piece of jargon. Let's break down what that actually means mechanically in the human body.
Yeah, let's look at the biology. So 12-LOX, or 12-lipoxygenase, is an enzyme that sits inside your blood platelets.
Okay.
You can think of it as basically the chemical alarm bell for your platelets. So normally it just sits quietly. But when it gets triggered, 12-LOX just goes into overdrive. It signals the platelets to change shape, get sticky, and clump together, and that is what forms a blood clot.
Oh, wow. Okay.
So CAD-1005 is this targeted molecule designed to bind to that specific enzyme and essentially muffle the alarm bell. It stops the platelets from panicking and clumping.
And the specific panic they're trying to stop is for a condition called heparin-induced thrombocytopenia, or HIT, and the irony of this condition is just wild to me.
It really is a cruel irony.
Yeah, because heparin is a standard blood thinner. If you go into a hospital for surgery, they routinely give you heparin to prevent blood clots. But in a small percentage of patients, the immune system mistakenly identifies the heparin as a threat.
Right, it attacks the cure.
Exactly. It creates antibodies that attack the heparin, and in the crossfire, those antibodies hit the platelets and smash that 12-LOX alarm bell you were talking about. So the very drug given to prevent clots triggers these massive life-threatening blood clots.
It is a devastating feedback loop.
Yeah.
And what is staggering from a market perspective is the historical lack of innovation here. There hasn't been a new molecular entity approved to treat HIT in over 2 decades.
Over 20 years. That is an eternity in medicine.
An absolute eternity, mostly because the underlying immune mechanism is just so complex to tinker with safely.
Wait, so if there hasn't been a new drug in 20 years, how are doctors treating patients when they develop this in the ICU right now?
Well, they rely on legacy treatments, mainly alternative anticoagulants, things like argatroban and bivalirudin. So when the staff realizes a patient is developing HIT, they immediately stop the heparin drip and pump in these alternative blood thinners.
Okay, so they just switch the thinner.
Right, but the limitation here is crucial. Those legacy drugs only act downstream. They are just trying to manage the clots that are already forming. They don't do anything to stop the underlying immune cascade that is triggering the whole crisis.
It sounds like a traffic jam.
How do you...
Well, the legacy drugs, they're essentially just tow trucks, right? They are rushing in downstream to pull the crashed cars out of the way to keep the highway moving. But CAD1005, by hitting that enzyme, it's actually going upstream to the traffic light and fixing the glitch that's causing the crashes in the first place.
That is the perfect way to visualize it. It shuts off the biological spark instead of just trying to soak the flames. And because it's such a novel upstream approach to a rare condition, the FDA granted CAD1005 orphan drug designation.
And let's talk about the economic weight of that designation. Because from a wealth-building perspective, orphan drug designation is a massive competitive moat.
It is one of the strongest protections a small biotech can get. When the FDA grants it, it guarantees a 7-year period of market exclusivity in the U.S. upon approval.
7 full years.
Yes. For 7 years, no generic competitors can swoop in, reverse engineer the molecule, and undercut them. It gives Cadrenal immense pricing power and shields their IP. The FDA does this to incentivize companies to tackle these rare diseases that just don't have the patient populations to attract big pharma right away.
All right, so mapping this out, we have a first-in-class molecule, a 20-year innovation drought, and a government-backed 7-year economic moat.
Exactly.
Now let's look at the fundamentals. Because knowing that the drug works differently than everything else, the obvious next step is looking at how it actually performed in human trials.
And this brings us to one of the most fascinating regulatory plot twists I've seen recently. Because when you look at the raw top-line data from their phase 2 trial, they failed.
They failed the primary endpoint. I was reading the clinical data, and the primary metric they were measuring was this thing called platelet count recovery. It was a tiny sample size, too, just 24 patients, and the drug totally missed the mark.
Right. But here is the bizarre twist. Despite failing on paper, the FDA still granted Cadrenal an end-of-phase 2 agreement. They essentially gave them a greenlit path to move forward into a phase 3 registration trial.
Which is just confusing. I mean, usually if a microcap biotech misses a primary endpoint in phase 2, it's a death sentence. The stock crashes, the pipeline dries up, the company folds. How do you fail the test and the FDA just decides to change the grading rubric after the fact?
To understand that, we have to look at the difference between a surrogate endpoint and a clinical endpoint. In that trial, platelet count recovery was being used as a surrogate endpoint. It's basically a biomarker, an assumption.
Like a proxy for getting better.
Exactly. Historically, doctors assumed that if platelet counts went back to normal, it meant the patient was recovering and the clot threat was passing. It's like using a thermometer as a surrogate for an infection. Temperature goes down, you assume the infection is clearing.
But Cadrenal went to the FDA and argued that the thermometer was broken.
They argued the rubric was fundamentally flawed for this specific upstream pathway. They said, look, platelet recovery might be a fine metric for the old downstream drugs, but it is a terrible proxy for measuring if our upstream drug is working.
Right, because what actually matters to a patient in the ICU isn't some number on a blood panel. What matters is whether or not they suffer a catastrophic clot.
Precisely. Do they get a blood clot or not?
Yeah.
So they forced the FDA to look past the surrogate biomarker and look at the actual clinical outcomes of those 24 patients. And when you look at that secondary data, CAD1005 showed a massive absolute reduction in actual thrombotic events, greater than 25%.
Wow, greater than 25%.
Yes.
Yeah.
And a reduction like that in life-threatening blood clots is profoundly significant. So the FDA reviewed the data and agreed. They acknowledged that platelet count doesn't tell the whole story here, and they officially agreed to abandon the old metric and use thrombotic events as the new primary endpoint for phase 3.
That is a staggering victory. They took what looked like a failure, proved the drug was actually stopping the physical clots, and got the FDA to say, okay, we are just going to measure the actual bad thing happening now.
They successfully de-risked the clinical pathway. The parachute is cut.
That brings us to the catalyst timeline. The science is validated, the regulatory pathway is clear, and they have a global 120-patient phase 3 trial ready to launch.
Right, which is the final hurdle before commercial approval. But there are some major events to watch for very soon.
Right, the Q1 2026 earnings report in mid-May. When that call happens, I'm assuming no one's going to care about the revenue line item, right?
Because it will be zero. Exactly. The entire focus of Wall Street will be pinned to the balance sheet updates. They want to hear about financing.
And the other catalyst is the clinical side, the imminent announcement of the phase 3 trial initiation.
Yes, you want to watch for announcements regarding site selection, so which major hospitals have signed on, and the first patient in milestone.
Right, when they announce the first patient has been dosed, it signals the financial logistics are solved and the trial is officially moving.
It is a massive de-risking event.
Now let's pivot to the chart, because we need to talk about the technicals. And there's a very specific mechanical weight suppressing this stock price.
Yes, the recent SEC filing, the resale prospectus.
Right. Cadrenal recently filed a prospectus allowing for the resale of up to 1.2 million shares by selling stockholders. This is a crucial concept, this idea of overhead supply.
It is. When the market knows that 1.2 million shares could potentially hit the open market at any moment, it acts as a ceiling on the stock price.
Like a wet blanket on any momentum.
Exactly. Because if the daily trading volume is low, adding 1.2 million shares to the sell column will instantly crash the price.
Right.
So institutional buyers just sit on the sidelines. They know any upward momentum will be met by these stockholders dumping shares to take profits.
So what does market sentiment look like? Because we have this deeply asymmetric setup, an incredible FDA-validated medical asset paired with an overhead supply capping the stock.
Well, the retail sentiment is pretty neutral to bearish right now, entirely dragged down by their cash position. But when you look at the analyst valuations, there is a massive disconnect.
Yeah, I saw HCC Wainwright just maintained a buyer rating. They did cut their price target from $32 down to $13, obviously to reflect that overhead supply we just talked about.
Right, but $13 is still a staggering premium over where it's trading right now.
And Zacks small cap research is still holding a massive $25 valuation.
Which highlights the immense intrinsic value of that medical moat. The analysts are valuing the drug, the pathway, and the monopoly power of the orphan drug designation.
But if professionals are targeting 13 or 25 bucks a share, why is the broader market so muted? Is everyone just waiting for a partnership?
Yes, and reading corporate language in SEC filings is almost an art form. Cadrenal management specifically stated they are evaluating financing and strategic alternatives.
Which, in the biotech world, is the ultimate dog whistle for seeking a partnership.
Exactly. With a fast-track designation and an orphan drug designation, they are highly attractive for a non-dilutive regional licensing deal or a co-development partnership with Big Pharma.
And a non-dilutive deal is the holy grail here, because normally they would just issue another 20 million shares to raise cash, which totally destroys the value of the shares you already own.
Right. But with a licensing deal, they can go to a massive pharmaceutical company and say, we have the only phase 3 ready 12 LOX inhibitor in the world. You pay $20 million upfront to fund the U.S. trial, and we give you the exclusive rights to sell it in Europe or Asia.
The larger partner brings the deep pockets, Cadrenal keeps the U.S. rights, and retail investors don't get diluted into oblivion.
Exactly. Big Pharma hates scientific uncertainty, and Cadrenal already eliminated that with the FDA.
Now let's talk about the risks, because we have to put the hard numbers on the table, and they are stark.
Welcome to the Valley of Death for microcap biotech.
Yeah, as a pre-commercialization company, Cadrenal has zero revenue. Their net loss for 2025 widened to $13.24 million, up from $10.65 million the year before.
And while their loss per share improved from $8.73 down to $6.64, we have to be clear why.
Right, it wasn't because they made money. It was because they issued more stock and diluted the shareholders.
Right. And despite running a tight ship, I mean, they spent just over $4 million on R&D in 2025. They ended the year with only $4 million in cash.
That's the terrifying part. $4 million in the bank, but a $13 million burn rate. They are drastically underfunded. How can Wall Street take a global phase 3 trial seriously if they can't even afford to keep the lights on?
That skepticism is exactly why the stock is trading where it is. Running a trial across multiple hospital sites requires immense upfront capital. If they fail to secure that partnership, the risk of massive dilution is very real.
So with everything on the table, what's the final verdict?
Synthesizing the research and the setup, the overarching verdict lands on a bullish score of 7 out of 10.
Okay, 7 out of 10.
Yes, and it's framed as a speculative long-term hold with a 12 to 24-month horizon. The entire thesis rests on their ability to bridge that cash gap, initiate phase 3, and deliver interim data. If they cross that financial valley of death, that 7-year economic moat is incredibly robust.
It really is an asymmetric risk profile. Highly speculative on the downside, but anchored by unprecedented regulatory validation on the upside.
Absolutely.
And I want to leave you with a final thought to mull over. We know CAD 1005 targets this pathway to stop a very specific, rare blood clotting condition. But if this first-in-class inhibitor proves it can treat the root immune cause of HIT, what other complex, deadly immune-driven diseases might this exact same biological pathway unlock?
Right, if you prove you can fix the wiring for one room in the house, it's only a matter of time before you start fixing the wiring for the entire neighborhood.
Exactly. Now, need emergency cash. MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR, fees, repayment terms, and total cost before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.